Attention, everyone. Something major is brewing in the precious metals space right now, and if you're not locked in, this could catch you flat-footed. China, the absolute heavyweight in physical gold and silver demand, is stepping back big time. Their key exchanges are powering down, traders are going offline, and over the next week or so, we'll see exactly how much global price action has leaned on their firepower. I'm recording this on Friday, February 13th, 2026. Hit the comments right away with where you're tuning in from. States wrapping up the trading day, Europe heading into evening, Asia already rolling. This community spans the globe, and these developments hit holders everywhere the same way. Quick note before we jump in. If you're here often but haven't subscribed yet, do it now. It literally takes a second and helps spread these breakdowns to more people who need them. Stats show plenty of viewers aren't subbed yet. Let's fix that. Straight to today's moves. Gold rebounded solidly, silver exploded higher. Traders are reacting to China's impending quiet period plus the fresh US inflation print. Spot gold climbed around 1%, trading near $4,970 to $4,980 per ounce after dipping below $5,000 yesterday. Silver surged over 5% in spots, pushing towards $78 to $79 per ounce, bouncing hard from recent pressure. Surface level, it's a nice recovery day, but the real story ties back to China's dominance. Let me lay it out clearly. China doesn't just consume metals. They've become the gravitational pull for worldwide pricing through heavy speculation and derivatives activity. Experts like those tracking bullion vault flows have nailed it. When their markets go dark, the rest of us have to navigate without that major directional force. The Shanghai Gold Exchange and Futures Exchange wrapped up today ahead of Lunar New Year, staying closed through February 23rd and reopening February 24th. That's over a week of no Chinese participation. Think about it and comment. What happens when the biggest consistent buyer takes a breather? Prices crater without the floor? Western players grab control? Or does everything just drift until they're back? I've got my read, but let's build the full picture first, especially on silver, where things are unprecedented. China's silver demand is insane right now. Order backlogs are piling up. Producers can't deliver fast enough. Near-month futures contracts are trading at hefty premiums over later ones. Classic backwardation screaming extreme tightness. In balanced markets, you'd expect the reverse for carry costs. But here, buyers are paying up big for metal today because they're worried about availability tomorrow. A key move that slipped under the radar. The exchange tweaked delivery rules to curb hedging positions rolling into physical, basically plugging the leak on warehouse outflows during this crunch. That's not everyday housekeeping. It's a defensive play to avoid a delivery meltdown. So, post-holiday? That pent-up pressure doesn't vanish. Lunar New Year gifting traditions could even supercharge it. Looking back historically, pre-Lunar New Year often sees strong buying as people stock up on gifts, and that support frequently carries through the closure. Conventional wisdom says prices tank without China, but data shows resilience, sometimes consolidation or even upside as liquidity thins and other markets step in. This cycle isn't a cookie-cutter repeat, though. Volatility has been brutal. Silver's swings match the wildest since 1980s hunt era. Gold hit massive highs, then shed sharply. We're post that January frenzy. Acceleration cooled into consolidation, where macro proof drives the next leg, not just momentum. Today's CPI landed. Headline up 0.3% month over month, annual around 2.7%. Core similar. Not runaway hot. Gives the Fed some breathing room on cuts, which is net positive for non-yielding assets like metals by lowering the hold cost versus cash. Big picture zoom out. This is a full-on hard asset revaluation. Sky-high global debt, monster deficits, endless printing. Traditional havens like bonds and currencies look wobbly. Central banks are stacking gold aggressively. Silver rides industrial demand without that institutional backstop, so it swings harder but has monster upside potential when conviction builds. With China sidelined, watch these paths. Reduced liquidity could weigh on dips, or thin books let small buying spark squeezes. Or we range trade until reopen. Core supply demand hasn't budged. Silver's tight, China's orders linger. Rule changes signal ongoing worry. Action items to keep front and center. We're in grind/consolidation mode. Expect choppier, measured moves over vertical spikes. Digest today's CPI reaction fully. Mark February 24th as the big return date. If demand roars back, fireworks. Above all, anchor to your long-term view. Fleeting red days don't erase the thesis of systemic stress favoring metals. Your turn in the comments. Let's make this interactive. Realistic for gold to tag $6,000 by year-end like some bank's project? Gold or silver? Which has more juice left? How'd you ride January's roller coaster? Held steady, trimmed, or loaded up on weakness? And drop your country or city. Love seeing how spread out we are. If you've stacked metals and it's paying dividends, share those wins below. They fire up the group during these testing phases. Wrapping this up, we're in the thick of a major financial shift. What felt unbreakable is cracking. What got dismissed is proving essential. Metals aren't nostalgia. They're practical insurance against debasement. Central banks vote with purchases. China scrambles despite the break. Volatility screams opportunity. The next stretch tests resolve, but the setup favors conviction holders. Serious forecasts like $6,000 gold aren't wild. They're from institutions managing trillions. One final clear point. Everything here is for education and context only, not personalized financial advice. Your situation, risk level, and goals matter. Always research thoroughly and talk to qualified pros before acting. A video isn't a substitute for tailored guidance. Catch you in the next one. Stay focused, keep your edge, and don't let short-term noise override the signal.